we know the sheer weight. We talk about that all the time. But the weight of these names really is the weight on the market. And as much as we've talked for weeks about the broadening of the market, whether it's industrials, whether it was transports, even some small caps, EM makes fresh relative all-time lows. As someone that was getting kind of bowled up about EM, you've had a lot of different head fakes. 1 week ago, we lost the semis below that 50-day. So I talked about semis. We all have talked about semis in terms of their leadership. You lost that leadership, and then you then had the Qs, which yesterday essentially gave up that 50-day, and today the S&P as well. So that's happening at a time when, if we're getting a breakdown in the biggest names in the market from significant levels, at a time when maybe we're getting a breakout in yields. And we'll sprinkle in some China, we'll sprinkle in some Fitch, we'll sprinkle in some other things that people, this just wasn't part of the equation, Tyler, in terms of what we were talking about for this market.
How, Guy, important to you is the idea that these bellwether stocks, these bell cows of the market, are breaking below some technical support levels?
Extraordinarily, but I think the audience should know, you got a late call for this. I mean, you're hanging out back in EC.
That's right.
And that's the pro you are. That's what's that mountain with all the
it's called Rushmore.
He's on it.
No, I mean,
Melissa was called to jury duty. Indictments are everywhere these days.
Everywhere.
I tell you, they're everywhere.
Yes, they are.
She luckily was freed, however, so she will be back.
Free
tomorrow.
Melissa. That's a hashtag that's trending.
That's a hashtag.
To answer your question, and obviously thanks for being.
And thank you for the iced coffee.
You're welcome.
For me.
They're extraordinarily important. I mean, again, I've said it. I think it's true. Microsoft is one of the 5 most important companies on the planet. It doesn't mean the last run-up, the stock didn't get extraordinarily expensive. Given the earnings releases over the last few quarters, they've been good, but not great by Microsoft standards. And Apple, a stock that everybody seems to think just goes higher, it actually does go lower as well. And now you've seen 3 disappointing quarters by Apple standards. It's a company that's now gotten itself very expensive on valuation, especially with interest rates moving higher. So it is important, these companies, and more importantly, the fact that Microsoft seemingly has put in a huge double top, and Apple is now flirting with its prior all-time high. That's something to be concerned about.
Yeah, wasn't it at an all-time high just a month ago, within the last month, right?
Yeah, so the two of them specifically sold off after earnings. They've been down 10%. Another one we could throw in there is Tesla. And all 3 companies actually disappointed, on some sort of metric that a lot of investors had not been really too worried about from a valuation standpoint in the run-up. I mean, Carter has been on the show, a dozen times over the last few months talking about really this perfect 45-degree angle that those companies have had, at least their stocks have had, from their lows, whether it was Apple early this year or Microsoft late last year. And, just the magnitude of market cap that had been gained and the valuation in which it was trading at relative to other parts of the market. Like, this is really important. We've had this conversation a little bit. If you take out these 7 stocks that make up 25, 26% of the S&P 500, they're trading at multiples that they have not been that comfortably trading at above 30 times, at least Microsoft and Apple. The rest of the market, the cyclical stuff, the energy stuff, that stuff was trading well below a market multiple. So they were pricing in recession, whereas a lot of these other larger names were not. That froth is coming out of it. And I think a lot of it had to do with the fact that, we have this excitement around AI, this really strong secular shift that is going to play out for years, if not decades, that sort of thing. But a lot of the enthusiasm was encapsulated in a very short period of time. In trillions of dollars of market cap in a small group of names. And I think that's what's coming undone right now.
So, Karen, we talk about the technical things that are manifesting themselves, but Tim mentioned a couple of other things. You've got China, you've got Fitch, you've got all kinds of other little worries. You've got Fed in here somehow. Where do we put these technical measures in that broader context of other things that are making the market maybe over the last 3 weeks a little jumpy?
Well, one of the other things I think is interest rates, which you guys touched on. So we look at the 10-year. That
going
actually
up.
This morning hit a little over 4.25. I think it closed at like 4.21. So I think it's sort of just coming back to math, which is the higher the risk-free rate, right, the lower the multiple for stocks. So I think that's what's happening here, and we see it more in the really high flyers, names, with huge multiples. So the QQQ is getting hit more, the IGV getting hit more.
So what's
and then
causing...
I like some of those other names of lower PEs.
Yeah.
But that's not working right now either.
Why are interest rates going up the way they are?
Well, we had a guest on Andy Constant a couple of weeks ago talked about just the sheer volume of supply to come to the markets is making, you got to, the
you
amount
pay more.
You got to, yeah. Right,
you
the
got to pay
government's
more
got
to attract the buyers.
Yes, and so we're seeing a big move in the 10-year, big move in the 30-year, and the near end sort of staying about the same issue.